Wakarimaka everyone, and welcome to a slightly different market review. We are going to be doing a multi-asset market review, and this was based on some suggestions that had come in. They were doing, smaller ones, but segregated ones for different asset classes and doing the major um, securities in that. And then there was a suggestion which I thought was pretty good that why don't we just club this together and make it a more integrated discussion, connecting the different asset classes so that there is not only a better review, but also a better understanding of how different asset classes are connected with each other, right? All right, so this is I would say the first edition of that, and would love to have your feedback on what you think about it, and any suggestions to improve are always and most welcome. My information is on the screen. This is Musa speaking, and you have my contact information. I'd love to hear from you. Right. So in this review, we're going to be looking at gold, silver, platinum, palladium, the USDINR. We do a separate forex for multiple currencies, but that's for a separate session. We look at currencies across the world, what's moving, what's lagging, the dollar index, and that's a comprehensive review for people who are looking at positional currency opportunities. But this is only if you are placed in a place, in a country, or in a jurisdiction, or have a trading platform which allows you multi-currency trading, right? Okay. In this one, we're going to be just focusing on the USD INR chart. We'll also do commodities across the board, metals, energy, crude oil, of course, and look at how that is all playing out. As I've already discussed in the previous webinars, we just stick to technicals and a little bit of extraneous, as in anything other than charts is being defined as extraneous here, and just look at how events, though they of course do impact the markets. If we were just purely technical focused, then or chart focused, then how things could pan out, right? All right. So with that, and also final disclaimer that this is not investment advice. This is just information and educational purposes only. Please do your due diligence before making any investment or trading decisions. Thank you. All right, so let's jump in and look at gold first, right? And look at how that is going. And let's start with actually international gold in the sense that gold priced in dollars, right? We look at the Indian rupee chart in a little while. So uh, this is gold per ounce. Right? It just converts to grams or kilos or whatever, just in the same way. And gold has, slightly been, inching up from about 4,400 levels to 4,800 levels. That's, of course, a good 10% gain. But if you look at it a little closer, then you will see that the up move is not very convincing. It's like a little bit of a hesitative up move, and that's the one of the reasons for having some caution and not rushing into gold right now. Let it pan out. This is not a clear chart pattern as of now in the sense of a directional movement one way or the other. It could very well turn down or it could go up. This is, of course, the daily chart that you're looking at. So right now at around $4,870 per ounce is where it is. It may go to 5,000, and then we'll have to observe carefully there what it does and how the price behaves at that point. Is an equally at least a 50-50 chance definitely right now that it could go up and then come down, or even come down from here, or even go to 5,000 and then return down. So the gains, if any, are going to be small as of now. Of course, this is as being discussed on 19th April 2026 at about 4:15 India time. So in terms of pure chart analysis, this is not a pattern which is probabilistically saying one thing or the other in a more convincing manner. So these are the times when you like just take a pause and wait and not rush into a movement. If you are a very short-term trader, like 1 or 2, 3 days, 1 week, maybe, yeah, maybe there's a possibility that $5,000 could happen, but I would trade that with very strict stop losses, right? Um, in the longer time frame of several months and all, it's more likely that gold is going to probably correct down. If the global geopolitical situation cools off, there would be even more impetus for gold to cool off, at least on the geopolitical side. On the monetary and the fiscal side, there are still challenges which could drive gold up, but we perhaps have a webinar later where we'll just discuss gold from multiple perspectives and look at what's happening there from the fundamental, geopolitical, technical, monetary, fiscal, central bank behavior and all that. So that'll be for a later time. But for now, in terms of what should you do, this is one of those wait and pause. Don't do anything. Just let the market decide what it wants to do, and then we will accordingly go in or sell or whatever that we want to look at. So uncertain moments as of now. So just look at staying away. Same thing basically goes for silver, right? Though silver seems to be a little bit stronger, right? And definitely a good move from about 66 to 81. Definitely looks impressive. But at the time of like the 2 years back for both gold and silver, where you had a nice uptrending move for weeks and months, almost 2 years, that's definitively over, right? So unless you have a really long-term perspective and you believe that this is like going to create fresh life highs, both gold and silver, there is no compelling reason at all to be in either of these precious metals at this point, right? With that, we look at palladium and platinum, right? If you are in, say, the Gulf or in Hong Kong, Singapore, US, UK, Europe, these are things you could easily participate in, all these, bullion products, but you can't really do this in most of Asia or Africa. Uh, Again, both palladium and platinum have just followed basically gold's pattern and silver's pattern. So there's really nothing much home to write about in these two cases either. It's just more or less a wait and watch game. Some of you who've been pretty observant of our charts in the past might have noticed that on the platinum and the palladium we have these markers, right? Of the 74% rise in palladium, and this was in 2024. Can you see it formed a really nice base there, right? So palladium had formed a really nice base. So had platinum, a much longer rectangle actually, and then decisively broke out, almost textbook. And I had observed this and I had marked this to a couple of close friends, and just told them that. And these were all people who were in places of the world where they could have actually participated in this move. Um, I'm sure some of them made money, though. I have no idea who and exactly how much. But you can see, you had a 150% move in about 6 months, 7 months, right? Maximum 10 months. This was in platinum, and this was in from mid 25 to say, December to the end of 25, Jan 26. And the same thing happened in palladium, but a much smaller move, about 73, 75%, about 100%, let's see. I mean, this is actually erroneous. You don't take it from the bottom, you take it from the time it sort of moved up, and it was a 74, 75% move, right? And platinum, if you look at it from the time of consolidation, 150% versus from the place of breaking out, I would say, let me just correct that. Yeah, fair to say that you could have easily made it till about here, which would be about, say, about 100%, right? So those were the moves. And then after that, right now, both of these are in a sideways corrective phase. Let the correction get over, and then we decide, whether the up move or the uptrend continues or not. So all of bullion is just a wait and watch approach. Really, nothing much to actively look into it right now. Like I said, unless you have some very compelling reasons to think that any or all of these or any of these are multi-year uptrends. In that case, it's a different thing. The time horizons that we are talking about right now are far more limited. Right? But even technically, I would say that even for a multi-year approach, maybe you just sort of enter in small bits and build your holding. Wouldn't go in with a bulk investment right now, right? So that's on the bullion side. Now coming to how okay, let's also look at bullion on the India specifically, both gold and silver. So this is, you can see that the charts are like almost ditto, right? Gold and silver in terms of the US chart and the India chart. There is one point, however, that gold prices and silver prices in India are a function both of the price movement of those commodities in the global markets and the fluctuations or the movement of the Indian rupee against the dollar. So those of you who have been following the forex side and or the webinar will know that the Indian rupee has constantly been depreciating against the dollar. 91, 92, 93, 94, 95. It's strengthened a little bit right now, and if the strengthening continues, and if gold also corrects a bit, then you're going to have a fall in the gold price of the Indian rupee. But as of now, the same wait and watch pattern, which is there. So there was a almost 28% correction, which happened over a period of 3 months, and that really cooled off the market, and a lot of interest just went away. As you might have noticed, the headlines also, were really not talking about gold prices or silver prices anymore. And technically, again, there is more reason to say that gold is likely to cool off rather than go up, right? Okay. Silver, basically the same thing. Again, a sideways move, a corrective move. And if you just, quickly look at these two, just stay focused on this part of the screen, you'll see that silver is not really showing the sort of strength or in the recovery side as gold has, right? So this move in gold is a decent one, a good one, right? Showing relative outperformance. Silver is it's grudgingly going up. Not saying it's not, but it's very grudgingly going up. So there could be uh, higher prices on silver. At least seem to be uh, capped as of now compared to that of gold, right? So this is what we would call a sort of a congestion zone. Technically speaking, no clarity again on exactly where. So silver could go, this is in rupees, right? And this is in rupees per kg. We are at about, not exactly, this is so the futures price 2,57,000 per kg, could go to 276. Then we'll have to wait and watch, right? So that's about gold and silver, right? So bullion, unless you have some compelling reason or some personal reason to buy it, a non-financial reason, then yeah, these are places that you don't want to be actively looking at right now, and wait till some clarity happens on the price direction. Coming to global energy, basically crude oil and natural gas. So this is US oil, right? And then we also have, there are different types of oil. And so the pricing in the US tends to be different from the pricing in UK. It tends to be a little bit different from Europe and then Singapore, Hong Kong, China, and Japan. Right? But again, the global benchmark is basically looking at US or crude oil at New York or UK Brent, for example. But more or less, all the patterns are the same. Big cool-offs from $113 a barrel to $82 a barrel. Uh, at this point, looking to go down further, right? Again, purely technically speaking, the crude oil is definitely much more settled now. But from a monthly perspective and technical perspective, more downside is likely than upside. Right? In the short term, I think there's going to be a lot of volatility in crude and energy prices. So not something that you want to be trading. It's a high risk trade. But if you're looking at and energy ETFs, for example, exchange traded funds, especially you are able to do that with physically held energy funds anywhere in the world, then again, yeah, just a bit wait and watch. Lower prices perhaps are likely. Right? Um, in terms of the very long term, if crude, this is our US oil also at around 83, 82, could come down to 71, right, or even 66. That will be a big surprise, and not something that the markets would definitely welcome it. I think globally there'll be relief that that is happening. Of course, all the drama about the Gulf of Hormuz and how that pans out is really something that we have no idea about. This is something that was going around on the sort of in the financial world, and you might have come across it. Basically, saying that they should change the name to the Strait of Schrodinger because it's both open and closed at the same time, right? A meme going around on the internet, right? Okay. Natural gas, at least in US, right, has really, in IMEX, not Europe, has really cooled off quite a bit from $7.50 to like 2.6. That's like a massive, 60, 70% correction. If you are in the US and if you are anything to do with energy and all, tell us how this is panning out for you. I mean, are you seeing a difference? At least your pump prices have dropped and things are sort of perking up and people are tanking up again. It would be nice to know. Right. So energy mostly on a sideways to bearish mode, right? Not very bearish, but yeah, definitely things cooling off a little bit. Right. Now coming to commodities, as I said, and this is going to stick to India for now, right? Looking at the metals. So copper, nice up move. If you remember, this is something we did, I think, 2 weeks back. Yes, right. And if those of you, it's there on our YouTube channel. You can go and have a check there and look at how this is panning out, what the discussions we did, and how the markets behaved. So copper showing a flag formation, very nice, right? About from 1,150 to 1,250, let's say 100. So quite possible that you're going to see another 100-point pop on the price, right, of copper physically 1,340. That's almost 100 rupees up from where it is right now. Technically, a very uh, nice level in terms of resistance, very precise level. It could easily go there and perhaps beyond. So copper looking bullish, looking like not looking like, but is a flag formation. And if it breaks out above 1,287, very likely to 1,350. Right. Then we have lead, a bit meh in the sense like nothing compelling on lead. There was some definitely a story in copper, right? You're looking at zinc. That this has really moved and may head to its life high, but I think they will be cool off a bit to maybe 335, 330 before it goes up, right? Nickel, nickel, very surprisingly, right? There's a very different story happening in nickel. It's got a very different chart, right? So if you look at the top left, that's or let's just make that the full screen, and this is the monthly chart. You can see that copper for the last, since 2017, like almost 8 years, sort of going up. You're looking at lead, right, which has gone up, gone sideways, and yeah, attempting to go up further. You're looking at zinc here, mixed bag, up, down, up, down. And nickel, right, it's just gone down and then it's sort of settled. And this whole thing about um, precious or like rare earth or like metals scarcity and all that is definitely not showing up in the price, right? So there was this huge spike in 2022, and from there it has really, really cooled off, but made a nice base at around 1,300 and now at 1,700. Could technically, reasons to go up to more towards, say, 2,000. That's definitely a possibility, but it's lagging, right? And might just play catch up, right? Okay. Aluminium is the, I would say, surprise here. And we mentioned this in the webinar some time back, rather 2 weeks back, that if you were looking at buying, then this is a product that can easily be bought. You can buy pure aluminum by the kg and at around 360 rupees a kg. And it has broken its old life high of 2022, right? It has done that in 26 Jan and then cooled off. Again, it did that in March and now it's doing that again. Um, uh, there would be some, I think, volatility. There is yeah, right. You would be careful, but I would say 400 cannot be ruled out as far as aluminum goes. Uh, what would perhaps be better is you are waiting for a cool off. Be patient. It could take weeks. Maybe it comes around closer to 300. That's almost a 20% reduction from the current prices. And then from there, if it goes to 400, you're almost working 30, 35%, 33% in return. So patient, traders, especially if you're looking at physical commodity trading, then this is something that you want to be tracking, right? Okay. And then we will close with what is happening on the Indian rupee, right? So the Indian rupee, so first of all, the dollar index. So the dollar index clearly cooling off in the last, 1 week as the war seems with ceasefire and all those things. Uh, Really didn't make a great new life high. Sorry, not a new life high, but didn't really break any resistance in any meaningful way of the highs of 25, where the dollar index was at 100.3, went a little bit above to 100.56, but that's clearly cooled off right now. So the dollar index for the last about 1.5, 2 years, basically range bound between 97 on the lower end and 100 on the other side. And this same cooling off has happened again this week. So the dollar really not having the sort of strength it used to have. It was 108, as you can see here in 25, and even higher at 113 in 22. So the dollar in itself, when you look at the dollar index, has been range bound to, I would say, long-term bearish. So the de-dollarization theme that is so popular in the financial circles and all, maybe it's happening. And of course, with this uncertainty now sort of, what would I say, reducing, that's for sure, then the move towards the dollar seems also to be moving away. Now, as the dollar has cooled off, so has the USD INR. So the rupee, which had gone all the way to 95.21, is now at 92. Right, that's a pretty decent correction, and we could even see 90. It's at 92.57 right now. Even 91 is not something that you want to rule out. It's 91 is definitely possible. So if you are somebody who is needing to send rupees, send them fast, or rather send dollars, right? And if you're somebody looking to buy, then hold on. You could probably get a better rate, maybe 50 paisa to a rupee cheaper for the dollar, right? So maybe not maybe looks like a bit of a correction phase right now, but the long-term depreciation trend of the rupee is, very much intact. Let me remove all these charts and studies. You can see, just been going up. So just follow the cursor right now, up, 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 and that would be the uptrend. So if you are a multi-month, multi-year type person, then there's a lot of news about 100 happening. Now, of course, all that is gone. But yeah, the Indian rupee is not definitely out of the woods, and it's something that could very well come back, right? To return to the uptrend. Uh, I just saw this. Let me just take these things away a bit. These are all notes that I keep putting and taking shots of, and then sending it out on my broadcast list. So if anybody is interested in receiving that, then that's give me a message and I'll add you to the broadcast list. And you get more regular updates there. So you can see that this is a nice channel in which the rupee has been. If you go according to the channel, then we are down to 91.60, 91.70, right? And then from there, it takes hold of the channel, takes support of the channel, and then this uptrend continues. We'll have to see. So right now, it's in the middle of that uptrending channel. Uh, but the channel has not been broken. The uptrend is very, very much intact, and it would perhaps be, best to keep that in mind and factor that in if depending on whether you're buying or selling, right? So buying or selling what, dollars or rupees. So just to make it clear, if you're looking to buy dollars, then you could probably wait for 20, 40, 50 paisa cheaper, maybe even a rupee cheaper in the coming few days and 2 weeks. But if you're looking to $12, then you probably are better off doing it, today, tomorrow. All right. Otherwise, you're more likely to get a lower rate than an upper rate. But if you're looking at it, maybe like let's say 2, 3, 1 month out, then uh, channel wise, technical wise, we are probably back to 93, 94 in a month or two from now. Right. All right. So that's it. Thank you so much. That was hopefully short and crisp. And like I said, this is not financial advice. This is just for discussion, education, information. My contact information is on the screen. Would love to hear from you. So do buzz. Thank you. And do let me know how you looked at this multi-market, multi-asset market review and whether it's something that you would like to have more often. Thank you and have a great week ahead.